I'm Patrick Yip, the Director of Business Development at APMEX.
And I'm Brett Elliott. I'm the Director of Content. We're going to talk about the silver squeeze today, potential silver squeeze coming in May, stuff that we're hearing about in the rumor mill, and a little bit about what's happened in the past, and also what are the mechanics that could cause this to really rocket off or, prevent it from happening at all. I'll be honest, I wasn't thinking that we'd be sitting here talking about this after the events of 2021. So, but here we are. And for the people who don't know what happened in February 2021, do you want to talk about it a little bit?
Yeah, so the plan there is you had essentially a group called Wall Street Bets, and they squeezed a couple stocks too. So they squeezed AMC. AMC at that point had about a $0.4 billion market cap. Everyone ran into AMC, drove up the market cap to about $9.5 billion, which caused the stock price of AMC to jump. Similar thing happened in GameStop, where people ran into the stock, caused the market cap to increase from about 0.3 billion to about 12.7 billion. And then the thought is silver has a big short position too. So a lot of times people said, okay, let's try to squeeze silver. So back in 2021, a lot of people ran to the retail dealers, such as APMEX, such as our competitors. They thought that the goal was to buy up as much as silver as possible from the retail dealers and cause the silver price to go up.
Right. And I think that, you touched on this, and, the big difference, I think, with GameStop and AMC and the way that they were shorted is that they had massive short positions that were based on debt, right? And we don't quite have the same mechanic here in the silver market. In fact, the mechanics for the silver market and the pricing and the way things are shorted and all that it's very different than the stock market and how retail stocks work. And so we were talking about that a little bit before, and I think it's probably a good idea for us to go over that. Because I think a lot of our audience doesn't necessarily understand or know about the nuance there. And so I think the biggest thing here is that the concept of doing a silver squeeze is not based entirely on short positions in silver, right? It's based on more around causing a shortage of silver. Would you agree with that?
Yeah, I 100% agree.
Yeah, so you can cause a shortage at APMEX or any of your retailers, your local coin shops. Right. But what is that going to do to the spot price of silver?
Yeah, exactly. And my analogy, too, is back when you had COVID, too, everyone ran to Target. Everyone ran to Costco. They bought up all the toilet paper and it created a toilet paper shortage. It didn't cause any disruptions to the supply chain. Same thing with what happened in 2021. A lot of people bought stuff from APMEX. They depleted a good chunk of our supply, but it essentially back in 2021, it didn't affect the silver price.
Right. And I think that's kind of the most important piece here, is that part is not well understood as to how the spot price of silver is determined. And really it's based on the futures market. It's paper, it's derivatives. So if you go in and you buy up all the physical silver, for it to affect that market, it has to go upstream up the supply chain. So it's not going to be this immediate impact, right? It's going to be more of kind of a long-term effect, which is kind of the opposite of what you're trying to do in a squeeze.
Yeah, I agree.
Yeah. So the COMEX, we've been asked to comment on this a few times, right? Like I get it in the comments, see it in social media. We did a silver shortage video, and put that on YouTube. We got some comments like, we're saying, what about the situation at the COMEX? I'm like, well, what about the situation at the COMEX? That I feel like anytime we look at the numbers there and the data there, we're always kind of like running on maybe half the information necessary. So, but what we do know is that, the COMEX, it's primarily a hedging vehicle, and that they have multiple warehouses, multiple vaults, and they've got a lot of silver in there. And so the idea is that as people are trading in the COMEX, you can take physical delivery of the silver. And the idea is that if you have enough people taking physical delivery of the silver, that's going to drain their vaults, and then the price of silver is going to skyrocket. It's going crazy. You actually have traded commodities before.
I have traded commodities too. I've traded different corn, oats, soybeans. I've traded gold and silver, traded oil too as well.
How many times did you take physical delivery?
Very, very rarely. Actually, I don't think I've actually ever taken physical delivery. I think it's important to note that a lot of mechanisms like the futures and the COMEX, APMEX has futures contracts. A lot of mining companies have future contracts as well too. They use it for hedging purposes too. And the goal is to not take physical delivery. People are using it for hedging. That was originally why futures were created, was for the agriculture industry, for hedging. But a lot of people speculate on these too as well, just like me. It's like, I don't care to take a position of oats. I don't care to take oil. I mean, even if I like gold and silver, the forms that they deliver in the COMEX are not ideal for retail investors. I don't want a 1,000-ounce silver bar. I don't want a 400-ounce gold bar. It's just not the greatest form for a retail investment.
Yeah, absolutely not. And actually, the number of people traditionally that actually take physical delivery of silver, it's only 1%. So there hasn't been traditionally a huge number of people taking physical delivery. And like you said, the 1,000-ounce bars, not ideal for the retail investor. And in fact, if you want to place a futures contract with the COMEX, I believe you have to have a 5,000-ounce minimum, right?
Yeah, for silver, each contract is the SI contract is a 5,000-ounce contract.
So at $25 an ounce, what is that? 125 grand?
Somewhere around there. Yeah.
Yeah. Okay. So if you, I'm not sure how many people in the retail space have, roughly $130,000 floating around to play here, but my guess would be that we're probably not going to have a giant influx of Redditors trying to take physical delivery. It seems a little bit unlikely, but I also pulled up some numbers and I took a look at it, and there's a lot of analysts out there that are kind of publishing on this and talking about the possibility of a silver squeeze, and it always was showing what the net out or not. It was always showing the outflow, but not the net outflow inflow. So we took a look at what some of the net gains and net losses were on silver at COMEX, and typically, it's less than 5 million ounces if there's an outflow going. Now in 2022, there were 3 months where there was like a 9 million outflow month and like a 13 million, like a 12 million. It actually seems like a lot, but we looked at some of the numbers, right? And so the total number of registered ounces today is 34 million ounces. And, if we look at 2019, there were 23 million registered ounces. So we've actually got more ounces registered at the COMEX today than we did 4 years ago. But there's all this news popping out there about there's going to be a squeeze, they're going to run out of silver. Where is this coming from?
I think you bring up a lot of good points too. So a lot of times when people look at registered inventory, they look at the last couple of years. So if you take the chart back, so if you go back to the late 1980s, you'll actually see there was a period where registered inventories was as low as about 5 million ounces. It spiked up to about 20 and then back to 5. Basically from the period of 88 up till 2001. And so registered inventories were all over the place. They were pretty low at some point, but the price of silver didn't do much over there. Right. So from 88 to 2001, the price of silver flatlined. So another time too, if you look at registered inventories from 2016 up to 2021, they were actually increasing. And then the silver price increased. So my thought is there is no correlation between registered inventories and silver prices.
Right. I would completely agree with that. I think the only thesis surrounding, what's registered, what's eligible, what's available for delivery is this idea that the COMEX is going to run out. And if it runs out, then there's going to be this massive, it'll break the system and then the run on silver begins. That's the idea. So the question is that possible? And based on the numbers I'm seeing today, it doesn't look like the COMEX is near running out. I mean, have we ever seen an outflow of over 30 million ounces of silver in 1 month at the COMEX?
Yeah, I think there's a lot of interesting things you brought up too. So the size of the silver market is $1.4 trillion. So this is about 3,000 times larger than the AMC market cap, and about or actually 4,000 times larger than the AMC market cap, and 3,000 times larger than the GameStop market cap. You have to look also at silver demand too. Only about 49% of silver demand is industrial. The other 51% is things like jewelry, it's investment demand. It's like silverware. So the thought is, even if silver were to deplete out of the COMEX, at some point there's going to be more inventory coming onto the market. It's all supply and demand. Anyone who's taken an economics course knows that as price goes up, there's less demand. And I could tell you, if silver were $50, guess what? I might be selling some of my silver.
Oh, yes.
So if silver were $10, I'd probably be buying as much silver as I could get. It's all supply and demand. So as people try to drain the COMEX, try to deplete the inventory, the price is likely, maybe it goes up, but there's going to be supply coming on the market. You'll also look at a lot of these people who, let's say you manufacture solar panels. A lot of the decisions on solar panels is economics. Are you going to save more in the long run by having solar versus using your traditional electric source? At some point, if silver is $50, $100, that solar panel now becomes uneconomical. So people now say, okay, well, maybe I don't buy the solar panel. I think what you really need for a silver squeeze is the people who need silver regardless of cost. So if you're an electronic manufacturer, you're making like circuits, or you're an auto manufacturer, you need silver for your automobiles. Let's say you're Tesla, you're Mercedes, you need $500 of silver for every vehicle you make, and you're selling $100,000 cars. Okay, well, if silver, goes up by tenfold, let's say now they don't need $500 of silver, they need 5,000 ounces of silver. They're going to still buy it because they're selling a $100,000 vehicle. They don't care what the silver price is. I think that's what you really need for the silver squeeze to really happen.
It's macroeconomics, right? And it's, as you said, it's mostly that industrial base, and it does drive a ton of demand. And what's interesting about that too is that it's going to come to a point where, if you look at some of the areas that are growing, that consume a lot of silver, and you mentioned solar panels, I'm glad you did, because photovoltaics are projected to just explode, right? Over the next, I think some of the projections I've heard sound absolutely absurd, but over the course of the next 10 years, I've heard that the amount of silver needed could consume virtually everything that's being mined. Well, if that happens, a few things. You would expect a few things to happen, right? In response to this. So older solar panels use twice as much silver as the new ones do, right? So there's some innovation that the manufacturers have where they try to be a little bit more resourceful with what they have. But then also, 90% of the silver being actually consumed in industrial is not being recycled right now because of the economics. Yeah. But what's going to happen to the recycling operations if the price of silver suddenly rises to the point where it is lucrative? Well, now there's a new supply source that could be tapped into through recycling programs. So I think we'd probably see that start to ramp up too. And then that's going to start to balance out the price as well. But macroeconomics, definitely, that's probably the bigger play there. And I think that's actually like a good point to kind of talk about with, how does that feed into spot prices? Because really what you have is these big players like the banks trading on the COMEX, and they're also the ones who are acting as intermediaries between industrial manufacturers and like the mining operations. Like, you can, as a manufacturer, go direct to a mine or a refinery, but that's not typically what happens. Typically, they're going to their banks, right?
That's correct. Yeah.
Yeah. So once the banks are unable to get enough supply to meet those contracts, and things start to get tighter, that's when the price of silver probably is going to really start to pop up. That's more of the squeeze situation.
Yeah. And it was actually interesting too, even back in 2021. So I lead One Gold, which is that online investment platform that allows people to get a vaulted position of gold. So what we do is we source 1,000-ounce silver bars from the market. So these are basically eligible to be COMEX inventory, and we sell this to customers. But it was actually interesting back in 2021 during the initial silver squeeze is we called all our banking partners. We tried to get more 1,000-ounce silver bars, and they said, hey, none is available right now. It was a little scary at that point, but obviously supply chain freed up a little bit, and eventually we got more silver. But it's exactly that's what you're saying is it's the COMEX, it's the banks that lead and control this market.
That's right. So I guess the question is, it sounds like squeeze in May based on causing a crisis level shortage, probably not likely to happen. But long term, we're seeing demand for silver just rising everywhere. New technologies coming out. There's not really a replacement for silver, right? I mean, it's got certain properties to it that just it makes it ideal for things like solar,
Yep.
And like electric vehicles, which are, I mean, if we're looking at, I think the number is moving to all new vehicles being EVs by 2035.
Something like that. Yep.
Something like that, right? So how many vehicles is that per year? Like 100 million vehicles per year in the US, all using more silver.
Yeah.
So the thesis for long term for silver is really good because the supply is somewhat constrained, right?
Yeah.
How many primary silver mines do we have out? It's like 25%, I think. Yeah,
I don't know.
So the source for silver from the mines, there's about 25% primary silver. I think it's about 25% come from gold, and the rest is like lead, zinc, copper. Well, if you're primarily mining for lead, zinc, and copper, if the price of silver goes up, you're probably not going to take more copper out of the ground to get to the silver. Gold, you'll probably, if silver's doing really well, I bet gold's going to be doing really well too. So I'm willing to bet the gold mines would ramp up. That means about half of the silver supply is it's inelastic, it's constrained, it's not going to move with the price. So if you're thinking about it that way, then we've got this rising demand, somewhat constrained supply. I'm not sure how many years it takes to bring a new silver mine on board, but it's not a fast process. So the long-term prospectus for silver is really good. But does it amount to a squeeze situation?
Yeah, and I'm a big believer in precious metals. I own gold. I look at silver as that higher beta version of gold. Typically, what's happened in the past too is gold will first run. So we had it in 2011. Gold hit 1900. A couple months later, silver spiked up to 50. So silver generally moves a little later than gold and to a much greater extent. So I'm a long-term believer in silver. I don't think that we're really going to cause a silver squeeze in next month, but I think over the next 5-10 years, I think silver is much higher. And as you mentioned, there's a lot of properties with silver that make it great for industrial uses. It's the most conductive metal, which makes it great in electronics, and it's the most reflective metal, which is right. why they use it in solar panels.
That's right. It's funny because I want to avoid being too definitive and saying there's no way a squeeze is going to happen, because I know the moment I'd say that it goes published live on air, it's going to happen and I'm going to be eating crow. But it seems, just based on the numbers, it's like there's great long-term demand. There's some constrained supply. If you're buying silver now and holding it, it seems like there's just really good opportunity there. But if you're planning on there being a massive squeeze in the next couple of months, where you get all this silver and then you can go sell it and become, you went to the moon or whatever. That seems like a bigger risk that probably isn't going to pan out.
Yeah, and for investment too, I always look at look at your risk and your reward. Silver is about $25. It's been as low as $12 I guess the COVID crash in 2020. It's also been at $50 twice, once in 1980, once in 2011. So,
that's right.
You look at it, maybe you got another 25 or plus on the upside. Maybe you got another, let's say 13 on the downside. I mean, the risk reward is there. I mean, I think it could be a good investment, and maybe you buy a little bit now. If it goes down a little further, buy some more. But I think there's a lot more upside than downside.
Agreed. Really, when people ask us about metals, we usually tell them dollar cost averaging strategy. Just buy steady over a long period of time. It's hard to lose then.
Yep.
But we haven't ever told people to bet the farm, and I don't think we should start now.
100% agree. I believe in what I've heard, and I'm not confident but I need to check. But the thought is, back in 2011, they had a silver crash where it spiked down like, I don't know what it is, 7, 8, 9% or something like that. Mm-hmm. And I think May 1st was the anniversary of that drop down. So it's the retail investors trying to, cause this silver shortage. I guess the thought is that I guess depending on who you are, but the belief in some of the silver community is the big banks shorted silver when it was $50 in 2011. So this is a way for the retail investors to try to stick it back with the banks.
Yeah, I think that's probably, there's an element of that there. And I think there's also probably an element of, you have some people that are kind of influencers in the space, you know, and they're looking for things to talk about. And this is an exciting topic for a lot of people. And so they kind of lean into it a little bit, maybe a little more than they should. And it starts a conversation. And then it starts to take on a life of its own.
Yeah.
So
I think there's a lot of chat in the Reddit community and social media. Like everyone wants this like get rich quick scheme, whether it's crypto, silver, or whatever. And the thought there too is you cause a silver squeeze. Silver is going to go from, you know, $25 to $500. And I remember back in 2011, you could buy shirts that says, you know, silver $500, and obviously that marked a peak. But you know, the thought there is if you make these bold claims too, it's exciting, it gets people's attention.
Yes,
but like we said, it's like if silver is $50. I mean, I have some stats here, and they said 12% of 2022's demand is solar, 3% is photography, 18% is jewelry, 5% is silverware, and 25% is retail, like coins and bars. You have to assume that if silver is double, so it's $50, that a lot of this supply would come back to the market. Mm-hmm. Like it's just people are going to be selling. People are going to be cutting back their consumption of silverware and solar panels and stuff like that if silver is at a different price.
Well, and the other part of that too is, you know, what happens if it goes up to some like triple digits? You know, who's going to buy silver at that price? You know, I mean, I have to imagine that if you're a local coin shop, if you're a bullion dealer, you're probably looking at this, you're going, I'm not sure I have the cash position for a monster box of Eagles right now.
Yeah.
Especially if it's going to crash. And so they're probably then going and reaching out to their bank to talk to them about it, because they need to have some sort of liquidity to be able to play in a market like that. And, you know, there's going to be some people that just decide to sit out that squeeze scenario. So if it was like, especially with what we've seen in past times where things have rocketed up real quick to like $50 an ounce, if you're buying 1,000 ounces and then the price crashes the next day, I mean, and you haven't sold that inventory, man, as a business owner, you're in trouble.
Yeah.
So you have to do a lot of hedging.
Yeah. I think it's also important to note that typically no commodity goes up in a straight line. It's always one, you know, 2 steps forward, 1 step back, and it gradually gets there too. And, you know, another commodity that people use a lot is oil. Oil's about $80 a barrel. Let's say someone's calling for $800 oil. You know, it's going to take a lot for oil to go from $80 to $800, just like it's going to take a lot for silver to go from $25 to $250.
Oh, you bring up such a good point. So, you know, there's another guy, Peter Kraut, author of Great Silver Bull. He's been kind of a loud voice in the space for some of the very bullish analysis on silver and its price targets. And he gives this really great example of silver going up 37x. And it was that time period in the 1970s leading up to 1980, when it was like below $2 an ounce for silver, which I would love to have silver that price today. It's below $2 an ounce for silver, and then it had that run up to like $50 an ounce or something like that. And you know, that created that 37x scenario. But that was over the course of a decade, taking that low point in that decade and then looking at the high point in that decade. So yeah, it's over a long period of time. Commodities can have a pretty, you know, phenomenal rise, but that was also, you know, the Hunt brothers trying to corner the silver market. So that was part of that giant jump up. Not sure we could have that happen again.
Yeah.